Something happened this week that I have been watching build for 30 years. Donald Trump, the President of the United States of America, flew to Beijing and sat across from Xi Jinping. And while that meeting was covered as a diplomatic event, a trade negotiation, a geopolitical summit, what I actually watched as someone who has spent decades studying how empires shift power was something far more significant. What I watched was a tribute visit, and I need to explain to you exactly what that means because it directly determines the value of every dollar you own from this moment forward. I know that sounds extreme. Stay with me for 60 more seconds before you judge it. I just returned from a month in Asia, including 10 days inside China, speaking directly with the leaders, the investors, and the capital allocators who are reshaping where the world's money flows right now. And what every single one of them told me, independently, is the same thing I told Bloomberg Television this week publicly. The United States can no longer be relied on to fight to defend its interests. That one sentence, heard from every serious person I spoke with across 30 days in Asia, has a direct financial consequence for every dollar you own. And by the midpoint of this video, I am going to show you exactly what that consequence is and what you need to do before most Americans understand what just happened. Do not skip ahead. What I show you first is what makes the midpoint land with the weight it deserves. My name is Ray Dalio. I founded Bridgewater Associates, the world's largest hedge fund. I have spent 50 years studying how empires rise, peak, and decline. I have read every major power transition in recorded history. And I am telling you today, based on first-hand observation from 10 days inside China just weeks ago, that the event most financial analysts are describing as a diplomatic summit is actually the opening of a new era that will reshape global finance, global trade, and the value of the US dollar in ways that most ordinary Americans are completely unprepared for. I have never said what I am about to say publicly before in quite this way. So I need you to stay with me through every minute of this video. Let me explain the tribute system, because this is the concept that unlocks everything else I am going to show you. And I am going to connect it to your money immediately before I explain the history so that every word of this section lands with its full financial weight. Throughout history, when a new dominant power rises and an old dominant power begins to decline, there is a transitional period in which the world has not yet fully shifted, but the direction of travel is already decided. During this period, smaller and medium powers do not openly choose sides. They do something more subtle. They send their leaders to pay respects to the rising power. They show up. They sit across the table. They acknowledge, implicitly, where real power now resides. This is the tribute system. And here is why I am telling you this before I show you anything else about your money. The tribute system is not history. It is the mechanism that determines whose currency the world trusts, whose bonds the world buys, and what the savings in your bank account are worth in 10 years. Every shift in the tribute system in history has been followed by a shift in reserve currency. Every single one, without exception. And that shift is what makes this conversation personally urgent for you right now. The tribute system existed in ancient China, where emperors received visiting kings who brought gifts and recognition. It existed when the British Empire was at its peak, with leaders from across the world making the journey to London. It existed when America was the undisputed superpower, with the world's leaders coming to Washington. And what I observed during my 10 days in China, and what the Trump visit to Beijing this week confirmed publicly and unmistakably, is that the tribute system has shifted. The leaders are now going to Beijing, not because anyone is forcing them, because that is where real and growing economic power now resides. China's economy has grown from 15% of the American economy 2 decades ago to 60 to 70% today. That is a tripling of relative economic size in 20 years, the fastest accumulation of economic weight by any major nation in recorded history. China is making, as I said publicly on Bloomberg this week, a ton of money through its export earnings. The amount of financial assets China has accumulated and continues to accumulate is huge. And crucially, China is competing and winning in the areas that determine who controls the next century: AI, robotics, manufacturing, and the infrastructure of global trade. This is not a military story. I do not expect China to be an aggressive military power. This is an economic story. And economic dominance over time always determines whose currency the world trusts, whose bonds the world buys, and whose financial rules the world follows. Before I show you the exact financial mechanism, I need to tell you something personal, because this next section is the most important section of this entire video, and I want you to stay with me through it completely. In 1982, I publicly predicted a depression. I was so certain I was right that I stopped checking. I was completely wrong. I lost nearly everything. I had to borrow money from my father to pay my family's bills while my wife and young children depended on me. That failure gave me the most important rule of my professional life. The most dangerous financial moment is not when things go wrong. It is when things are still appearing normal while the underlying direction has already changed permanently. The tribute system has already changed. The Trump visit to Beijing is not the beginning of that change. It is the public confirmation of a change that has been building for years. The underlying direction has already shifted. What has not yet happened is the financial consequences catching up with most ordinary Americans. That gap between the shift that has already happened and the financial consequences that have not yet arrived is the most important financial gap I have observed in my career. And it is the gap I'm going to show you how to act on right now. This is the midpoint. This is exactly what I promised you at the start of this video. And what I am about to show you is the most direct financial consequence of the tribute system shift that I have ever tried to explain publicly. The US dollar's reserve currency status, the invisible foundation beneath the purchasing power of every dollar you have ever saved, earned, or invested, rests on one thing above all others: the world's belief that America is the indispensable nation. The nation whose economic rules govern global trade. The nation whose military guarantees the order in which those rules operate. The nation you must engage with because there is no alternative of comparable weight. The tribute system ending, the transition from world leaders coming to Washington to world leaders going to Beijing, is the most visible possible signal that this belief is changing. Not in the distant future, right now. This week, the United States has approximately 750 military bases in approximately 80 countries. Those bases exist under the assumption that if you host an American base, America will show up and defend you if you are threatened. What I heard from every leader and capital allocator I spoke with across Asia is that this assumption is now in serious doubt. Countries that relied on that guarantee for decades are quietly asking the question, if America will not show up, why should we hold American dollars and American bonds? And that question, asked quietly by enough sovereign institutions simultaneously, is the mechanism through which the tribute system shift becomes a direct financial threat to every ordinary American's savings. When sovereign holders of treasury bonds begin reducing their dollar exposure gradually and quietly, demand for dollars falls. When demand for dollars falls, the dollar weakens. When the dollar weakens, Every import you buy costs more. Your grocery bill, your energy bill, your car, your insurance. Everything with a component sourced from outside America becomes more expensive, quietly, gradually, without a single news headline that most people would recognize as the cause. I want to stop here for a moment and tell you something I have not said on camera before. When I came back from Asia and understood the full weight of what I had observed, I did not go to the office first. I went home, and I sat with my family, and I tried to explain to them what I had seen and heard, and what I believed it meant for their financial futures, for my grandchildren's financial futures, for people not yet born who will inherit whatever world this transition creates. And what I told them is what I am telling you now. The window to understand this and act on it is not permanent. The shift from one tribute system to another has always, in history, happened faster than the people inside the declining system believed it would. The people who acted early came through intact. The people who waited until it was obvious lost the most. Now let me tell you what I personally did with my own money the moment I returned from Asia, because there is a difference between observation and action, and I believe you deserve to see both. The morning I landed back in America, I called my team before I unpacked a single bag. The first instruction I gave was to increase our gold position to the highest level I have held in my career. And I want to be precise about why, because the reason matters more than the instruction. Gold has crossed $4,000 per ounce. It has risen significantly as the reserve currency story has developed. But the reason I increased my gold position is not performance, it is mechanism. When the world's trust in a reserve currency begins to shift, when sovereign institutions start asking whether they should hold fewer dollars and fewer dollar-denominated assets, the asset that absorbs the displaced trust is gold. It has been this way in every reserve currency transition in 500 years of history. The RMB will not replace the dollar quickly, as I said publicly this week, but the dollar's dominance will continue eroding gradually, and gold will continue absorbing that erosion gradually. The process has years of runway. GLD and IAU give any ordinary investor the same exposure through any standard brokerage account. I move my allocation to the high end of 10 to 15% of total portfolio, not 2%, not 5%, a meaningful allocation that reflects the actual risk level of what I have just described. The second call I made was to significantly increase our international diversification, specifically into markets outside the American system. American stock markets currently trade at approximately 35 times earnings. International markets trade at 10 to 15 times earnings. The gap between those valuations is the widest in recorded history. Goldman Sachs projects just 3% annual returns from American stocks over the next decade. In an environment where the dollar is gradually losing reserve status, those already inadequate nominal returns are further eroded in real terms by currency depreciation. VXUS gives any ordinary investor broad international diversification at minimal cost through any standard brokerage account. The third call I made was to reduce my exposure to long-duration U.S. Treasury bonds. I want to say this clearly because for 40 years, this advice would have been wrong. Long-duration Treasury bonds were the safest asset in the world as long as the world believed America was the indispensable nation. The tribute system shift puts that belief under genuine pressure for the first time in the modern era. When sovereign holders of Treasury bonds begin asking whether they should hold fewer dollar assets, Treasury bond demand falls, prices fall, yields rise, and America's interest costs rise on top of an already $2 trillion annual deficit. Move shorter. Reduce duration aggressively. The era of the Wong Treasury bond as safe haven is ending with the era of unchallenged American dominance. And the fourth thing I did was build a meaningful position in short-duration cash instruments, not as a long-term strategy, as optionality. When a power transition of this magnitude is underway, markets will create opportunities that do not currently exist. Having the liquidity to act on those opportunities when they appear is worth giving up some return in the near term. I want to end this video the same way I began it, with what I actually saw this week. Donald Trump flew to Beijing. He sat with Xi Jinping. And regardless of what was negotiated or announced, the signal that visit sent to every capital allocator, every sovereign wealth manager, every institutional investor I have spoken with over the past month was unmistakable. The tribute has been paid. The world is watching which direction future tributes flow. And the direction of that flow determines the direction of global capital, the value of global currencies, and the purchasing power of the savings of ordinary people in every country on earth. History does not announce itself, it simply shifts. And the people who understood that the shift had already begun before it was fully visible to everyone else are the people who protected what they had built. I am 75 years old. I do not need to be here. I am here because I have spent 50 years watching ordinary people lose the wealth they spent their entire lives building because nobody told them the truth in time. I refuse to be one of the people who knew and said nothing. If this video showed you a connection between this week's news and your personal finances that nobody else explained, subscribe right now because we are tracking every step of this transition together in real time. Hit the like button if the tribute system framing changed how you see what happened in Beijing this week. And leave one honest comment below before watching this video. Did you understand that Donald Trump's visit to Beijing this week had a direct financial consequence for your savings? Yes or no? I read every comment personally. I will see you in the next video.